Right, Tom Woolrych of Deutsche Rohstoff, also known as the Outback Oracle turned Berlin, Boulder or Schnitzelgeo, something like that, for the very close friends at least. I don't know about the wool part of it, by the way, but I do know that all of us could have been richer if we had bought founders medals when I first interviewed them about a year or so ago. Sadly, I mean, I know Luke and I kind of missed on that and on that first run up so far. And we've gathered here today to partly drown our sorrows, hopefully, but also partly to figure out if there's still upside left in this discovery, as well as, and maybe more importantly, to figure out how to spot the next founders, the next big discovery. And it's not only geology, because there are many moving particles. So I hope you, I don't know, have a couple of hours or whatever to listen to only the smoothest Aussie accents out there, mixed with dry humor and a Dutch person for some reason. But that's enough of me trying to be funny. I want to kick it off very high level here first. And essentially, Founders Metals, $4 stock now, $350 million market cap. B2 Gold just gave them over $12 million. And geologically, it doesn't seem like it's over as the drill results just keep coming in. And there was just recently a new zone discovered. Continuity is being proven up. Mineralization is expanding its size and so on and so forth. And I haven't said a tenth of what could be said here, but all in all, pretty successful story over the last year. And Tom, I want to start with you first, but geologically, what's made FDR such a success here?
Yeah, so it's sitting in a prolific type of rock that we just lump into a group of rocks called greenstones. I know it's one of your favorite parts of the world, certainly is one of mine. And Luke, I think, has had a little bit of exposure to West Africa. Guyana and Suriname are essentially the same package of rocks. The Atlantic Ocean, ripped them apart. There's a divergent plate boundary running through the middle of the ocean, pushing South America and West Africa away from each other. So you can imagine, and you can see on a map, it was one of the first pieces of evidence for plate tectonics, was piecing back together the Atlantic, closing the Atlantic. So they're just really good rocks, really good search space for finding large gold deposits.
What about Luke I'm definitely going to follow up on some of the things that some of the points you're making here, Tom. But Luke, what about you? I know you've definitely made a list about what else besides the rocks has made founders a success. So paint me the picture here. What else mattered in their journey so far?
Yeah, you don't often have a company that sort of starts from scratch and within a year makes a discovery. I'm not sure. I think we should call this a discovery, even though it was discovered before. And personally, I the first thing I remember from Founders is a short meeting I had with them in 2023, early in the year, at the conference, and asking about a financing, 20 cents, half a warrant. I looked at the grades and was like, wow, that's pretty impressive. And I talked a little bit to some people and found out that this was drilled before, and those high grade hits, in my mind, would quickly be twinned and get a bit of excitement and then probably die off again. And maybe I didn't think of it properly, so I said no to the financing, and that was perhaps a mistake looking at the chart right now. But that's my first memory of Founders, and they did really well. There's many things we can cover about the stock, but a little bit like Great Bear, if you make a discovery early and the share structure and everything is still clean and new and everybody's excited, then you still need luck that things continue to go well. And so far, I think everything has gone well for them. Even though, to be honest, I wouldn't have been able to spot this even after the first number of holes. So I'm still wondering if I could spot things like this, because this is not very consistent. Like when you have a hole of 200 meters at 2 grams from surface, I can understand that it's not likely going to be just one hit and never again. But with holes like this, it's a little bit more difficult to understand for someone doing lists and not doing models. So for me, it's still an interesting one to look back and see at what point was this a screaming buy, let's say? And I don't know at what point it was. Well, I can look at the chart, but what was the key piece of information that made this a go-to discovery? And I think that's the part that I'm interested in.
Yeah, I think your
Yeah,
wife
so
would be. I think your wife would be happy to hear that you're not doing models. She'd prefer you doing lists. But Tom, back to you now. Do you think you could have caught this early on, and more specifically, at what stage did you think it became obvious that okay, this is going to be the big one?
yeah, so I like Luke and others, I did see the early drill hits, and it did spark my interest. And I met the CEO. I think his name's Colin. I saw it promoted on Twitter, and one of the promoters that was early on it. It does scare me when he's in a name, because I don't want to be exit liquidity, right? So that was how I came into my thinking. That was one kind of red mark against it. And then the other thing that scared me off early on was that they didn't publish drill hole collars. I think that initially they were saying because they were worried about getting too much attention from local artisanal miners, but I find that a bit of a lame excuse. So that it's a bit like, why aren't you being transparent about your data? And I couldn't see any early on. I couldn't see the drill hole hits, demonstrating continuity. So they'd get a good hit, and then the next fensive line, it seems like this good hit had disappeared. So I did, I would have built a leapfrog model from day one if I could have. I think early in this year, I'm not sure exactly when, they did start publishing their collar data, and I did build a model. Let's call it the middle of the year, and I updated it when you asked me to come on and talk about the discovery, or we'll see if it's a discovery. So yeah, I've got some pretty interesting, good information. It's actually not all positive. There's still a lot of question marks about the continuity and the size. They drill very tightly spaced holes, which creates great headlines, but doesn't necessarily convert to ounces in the ground.
Okay, but so essentially you do want to build your model to know early on if this is going to work. What I was thinking about is there like a green flag that pops up where you see like, okay, this is, the good old, this is 100 gram meters. Now I'm paying attention. Or is it for you, like, is it 200? Or is it, continuity, the width of the intercepts? Is there something like a something small that early on could have suggested that this is going to be a big thing?
Yeah. I've since started using Luke's tools, Gold Discovery and Resource 100. So got to let my screen. That would be a flag, is 100 gram meters, and then I would have, that the founders' results would have come up when that happened.
Okay, but so essentially it's 100 gram meters. That's still the telltale sign of, or whatever you call it, that you're looking for. That's what you're looking for before you start paying attention. That's
right. So the rock, like I said earlier, there's 100 gram meter hits in very prospective rocks. So yeah, greenstones, and then I would start trying to pull together mapping information, which is as far as I got. I couldn't get very far.
Luke, back to you then. In that case, early on, you see this story, you're following it. Were there any signs? And again, hindsight 2020, I suppose, but still, I know you pay very close attention to corporately the way the company is structured. So, the shares outstanding, warrants, options, and whatnot. Is there something you could have seen early on that would have suggested this could be a success?
Yeah, and of course, it's not just the vehicle, because that's describing the vehicle, and I find it indeed very important. But of course, there needs to be something in the vehicle that is of value, and so it's not that I just look at those type of things, but I looked at the history of this company and of this project actually, and it has always been in the hands of a local company, Nana Resources, a Suriname company. And in 1996, David Fennell with Golden Star was exploring here and drilled 27 meters of 27 grams. So there you have a 700 gram meter hole. And I think founders were not lying about this. I mean, these good holes were in their initial presentation, so it's not that they were trying to hide it and then suddenly surprise people. But of course, not everybody knew this. So I was thinking in 2023, like, well, they will probably surprise the market with these type of holes, even though they will be infill or twins. And then 10 years later, because Golden Star was really a big company, a $600 million company, they dropped it. And then with the new David Fennell company Reunion, then called New Sleeper, they drilled it again and did a new option deal and drilled 10 meters of 9 grams. After a couple of years, dropped it again. And then Nana Resources started small scale mining this. And there's a presentation online that has been watched 10 times where the CEO or the son of the founder of this company was talking about profitably mining at this project. I'm not sure if it was Antino, but at least within the license, they were mining and small scale mining. And then Aurea Metals, Aurea Mining optioned it or took an option on it and gave that later on to founders. So this was sort of the history, which I find important because this was one of the reasons I dropped it. David Fennell has looked at it twice with his team, is a successful explorer. And if they drop it twice, what's the chance that the third one is going to make a discovery here while they are also experts in this region? So for me, it was like, it's likely going to be a bit of a hit for a while, but probably not going to be a discovery. So that was my initial reason not to buy the stock. And again, looking back, what was then the point of realizing something has changed? Difficult for me to spot. Even today, when I look at the drill holes, it is cheese for me. Lots of holes and lots of good intercepts, but to piece it all together and to know if it's going to work or has a chance, this is a difficult one for me as a non-geologist. And that's why I'm happy we have Tom here today to explain us a little bit what the odds are. And I'm sure the odds have improved because since then, of course, B2 Gold came and Chris Taylor joined the team or joined the board. So there's enough, there are enough signs to show that something is happening here and they're actually making new discoveries, but still difficult for me to know, is it going to work? And the chart suggests so, I think. But this is one where I probably lack the knowledge with my list to make a proper business plan. And I think you need some geological knowledge and review to see if this, as a complete picture, could work as a mining project.
That's exactly what we're going to get into here. Tom, I'll ask you in a minute if you think there's still a lot more geological upside left. But what kind of importance would you give, Tom, to historical drilling? I mean, it's almost every company I talk to, they tell me that there's been historic work. Oftentimes, that would also kind of be my thing, or my follow-up question is kind of like Luke's, where it's like, people have looked at it. Why did they drop it? What happened? Explain that to me. But so how much importance do you give to historic drilling from a geological perspective?
I would try and be agnostic when I approach the historical data. Quite often, companies run out of money, cycles turn. So there are good reasons for the projects to have not been fully tested. So it's project by project. If there's 100,000 meters of drilling in the project and they're still trying to push it, I'd be highly skeptical. But I'm pretty sure in this case there were a few holes, but there were plenty of gaps that needed following up. And like Luke said, what was the hit? 27 meters at 27 grams. That's a remarkable hit. So that things like that need to be followed up.
Is it so 27 meters, 27 grams, or whatever you guys said? So it's way over 100 gram meters. How significant is it that the high grade mineralization is also close to surface for you here? Is that also one of the first things that you would have looked at with founders?
I mean, that hit could probably occur at 600 meters and still be economic. But yeah, so again, it depends on the quality of the intercept. If it's true width, if you can see continuity from that hit to the next drill hole line to the next drill hole fence, to start piecing together large volumes to create large tons.
So you look, but you look at the setting that's gonna. Now I'm the one making lists here. It's we our character here. Luke, you should be doing this. But so what I'm writing down here is you look at the setting first. So that's where you kind of kicked off the whole thing. Is like, okay, it looks like the Birimian Greenstone Belt in West Africa, or like this is the right setting to begin with. Then you look for a high grade intercept, which is the 100 gram meter, where you take the grade multiplied by the width of the intercept. Then you looked at the depth. That'll be the third thing. And then what else? I mean, you in this case, they're exploring in what they call folded volcanic and sedimentary rocks, similar to Rosebell and Miriam. Would it be structural controls or lithological composition? What's the next thing that you would look at?
I would just try and be driven by data. So if there were 100 gram meter hits, I would want to then try and start looking at the geometry of the potential ore body. So geometry and scale is probably then the next most important thing. Of course, the geometry, it's called the anisotropy. So the way the ore body is stretched out is normally a structural control, either a structure or a geological contact. So by collecting data and by interrogating drill hole information, you do end up creating a structural model.
Isn't it challenging though, because what they have both, like they have high grade intercepts, but they also have bulk tonnage potential here. How challenging is it to reconcile these two styles of mineralization into one cohesive model, if you will?
Yeah, it's a problem that I'll demonstrate now. It's an extremely nuggety deposit. There's a meter at 100 grams, and then there's 100 meters at 0.3. Yeah, so they do have extreme nuggety results, and there are geostatistical methods for handling high nugget to create a high confidence resource. I haven't gone to the full depths of what you would need to create a resource, but I've created a volume that we can look at and discuss how that volume might look if it was just 1 gram, total resource at 1 gram or total resource at 5 grams.
Yeah, let's go and look at that.
So this is I don't think I have a map showing the entire license package, but there are 3 main zones now. Wheezy is one of the more recent discoveries, as well as Lower Antino. We don't necessarily have to look at them today because the bulk of the information is coming from Upper Antino. Here's the airstrip, which anyone who's been following the story has probably come across, and there are multiple artisanal pits where they've been mining the oxide material, the shallow stuff. So where should I start? I mean, do you recall, Luke, there was maybe, let's say within this area, there was maybe 10 holes, some rock chips, the artisanal mining, pretty good indications to start and go drilling. What I'm showing here now, these are all the drill holes, and I mentioned earlier that I mean this rule here is 17 meters. It's probably you do eventually need to have 20-25 meter drill density if you're trying to drill a project to get measured, to get high confidence in your ore body. But I think at this stage, 50 or 100 meters would have been enough. So I'm not quite sure why they're drilling such high density. And then you can kind of see, this highlights what Luke and I have been talking about, is that the drill hole intercepts don't necessarily line up on a single structure or into a continuous ore body. So I really struggled to try and do a structural interpretation. And yet you've got a 244 gram meter hit here, 46 meters at 5 grams, and then you step across. That one's quite good as well, 44 meters at 2. And then on the very next line, the best hit that they got was 2 meters at 7. So this demonstrates the challenge with the ore body. So what I did was I created 3 structures. I call it the Froyo, the Ginger, and the Thrust structure. What I'm looking at is where drill intercepts start lining up along planes. These are these structures. Now, I then asked the interpolation to add a bias, to add anisotropy along these planes and generate a volume of rock. This is what the greater than half a gram volumes look like. You can see them in yellow there. So again, it's got a bit of the resource geologist, geostatisticians call it spotted dog. So it's got a bit of a spotted dog effect to the ore body. It's certainly not a good, it's just an hour's worth of work. It's certainly not a good resource. You can't have high confidence in it. But you can see, just eyeballing it, you can see that most of the good drill intercepts are captured within that yellow zone. So I decided to go to the effort of creating a block model based on that, and a block model so that oriented the block model along this northwest structure. Each block is 2.5 meters wide by 5 meters steep by 5 meters long. So they're my block sizes. And then I can start to cut the block model to show me everything greater than 0.5%, or I can, do it with this sliding rule here. So, next thing that Luke's going to ask me, okay, what's the tonnage of the block model at greater than 0.5 gram? Look at the statistics, and you can see I've got, yes, the model's cut by 0.5 gram. I've got a volume of 4.2 million cubic meters, which comes to 11.1 million tons. It's not a large ore body.
This is only using current drill data, right? You're not using the historical.
It's still open. And then the mean of all those blocks is 1.9 grams per ton. So Luke's already doing the maths, I think. It comes out to in the range of 500,000 ounces. So now I'm looking at founders. I'm looking at a very good start. No question, 500,000 ounces is a pretty good start. And like you've already pointed out, Antonio, there's several other things that need to be followed up. But then I'm looking at the market cap and the issues with the continuity and just wondering if is that fair price or expensive at the moment.
Do you think that a company like B2Gold, are they? There's not just one reason. If this was just 500,000 ounces and that's the potential, or even 1 million, they wouldn't be here. So I guess everybody's expecting the upside to be there. Is there any if you have a system like this, is it possible? Is it likely to have a more consistent body in that same region, or do you think this is probably the nature of the gold in this license, basically, or this region?
It could be. It could be that this particular belt within the Guyana Shield just doesn't have the right rheology, the right rock properties to create large volumes and big ounces like we saw over the border at Oko West with Reunion Gold, now at G Mining. So, it's early days. I can't say with any confidence, but it's certainly not looking like Founders is the next Oko West.
But recently they announced 82 meters of 1 gram gold, including 26 meters of 2.5 grams gold. I think that's at the lower Antino project. Well, within the same project, but they call it lower Antino. Is that a more consistent hole, or is it also carried by a couple of meters of
Yeah,
high grade?
I wasn't able to register the figure because there's no coordinates on there. But this is what you're talking about, 81 meters of the gram. Then they drilled, what you might call dusters on the other side. But the surface anomaly, this is called auger results. It's certainly got good scale. Must be over a kilometer. Quite high grade soil anomaly. So there's really only a single hole in Lower Antino, and that's it there. So let's see what happens. They need to follow up, and then probably drill perpendicular at a right angle to the main structure to make sure that they're not missing any geology or drilling down veins.
I think that it's very often that even if you look at all the press releases, can you get the full context around a project like this not being at the project? I could imagine that, let's just assume that B2Gold did a site visit. They walked the ground with them. They talked about the theory, the geology, and said, okay, at the end, it's not my language, so I cannot really go into it, but I can imagine that at some point you come to a conclusion. There's so much, area to be explored based on surface showings and drilling so far that, like, hey, we have to really spend another $20 million expanding on what we have, but also take a bit more risk around the project and drill, new showings and new targets that they may already have seen the potential at Lower Antino or maybe even another area, and 99% of the market is not aware of the potential perhaps being somewhere else than the area they're drilling right now. So the drilling area right now carries their valuation and is the reason that the company did so well. But maybe there are other regions, other places within this license that are of interest to B2Gold, for example. I'm just making something up right now, but I can imagine that these type of details are often missed by people like me, just looking at results and not perhaps knowing why the big company invested.
Yeah, I've thought about this a lot recently, but and essentially the word for it is duration. B2Gold are thinking 5 or 10 years. Next cycle forward. So they might be investing in this not for froyo. They might be investing in it as a sort of belt scale opportunity. But for you and me as an investor, that's pretty cold comfort because we don't necessarily want to be in this story for 5 years. So yeah, I think all your points are valid. B2 would certainly have signed a NDA and gone into a data room and gotten full access to all the data. And something's got them excited. Another thing to point out about this company is they're extremely good operators. I think, correct me if I'm wrong, I think they operate their own rigs. They drill a lot of holes, and their news flow is super high. So
they assay on site as well, which gives them the ability to move around quicker maybe than others might.
Yeah, so you're not stuck with this frustration where you drill a hole and you need to wait 3 months for the news flow to come out and to decide where to go next. These guys are really hitting the project hard.
Do you also calculate like average widths of a project? I'm just looking at, as always, I'm looking at a list and all the drill holes, and I'm not calculating the weighted average right now. I'm just calculating the average because it's quicker during our conversation. But I think it's the average is about 15 meters. Is that the average you have as well? And is that of importance here? What would be the minimum? If it would be carried by just 1 or 2 or 3 meters, it's way more risky than when you have a wider ore body, of course.
Yeah, no, that's a very good point. The mean of all of the uh, intercepts that they've given us on, the public database is 11 meters. So that's pretty good. That's nice and thick. They're not always drilling perpendicular to the orientation of mineralization. So sometimes it's not quite true thickness, but I think when they do get a hit, they're pretty good widths.
So here I'm still trying to keep my own list, following up in the footsteps of Luke. But so you start grade and width. I think I said grade before, but so no, you start with the setting. So you're looking at the geological setting, host rock. That's where you start. And then you look at grade and width. And then you're going to look at the size, as in how big can this ore body be? That's the model that you showed us. You're looking at depth. How deep is it at this size? When you know these things, and if you have more information, you go to look into the geometry, therefore the continuity of the ore body. We didn't talk too much about metallurgy, but I suppose that's going to be on there as well. It's been fine for founders so far. I think they went from 91 to 96% recently. And of course, yeah, structure and alteration. We didn't talk much about that as well, but so I suppose that might also fall within the conversation of metallurgy. Am I making any sense here when I call these things out? Or what else am I missing?
Yeah, so the metallurgy is sort of it should be happening in the second half of the first season. Once you start to get confident in that you're making a discovery, you don't necessarily want to waste money on expensive met testing if it's not going to go anywhere. Might be even a second season thing. You'll be looking at what your neighbors are doing in terms of the flow sheet, how to process the thing. Does the belt traditionally have refractory ores in it? Things like that. But it's sort of like a 300 million market cap plus problem.
Okay, that's fair. Yeah, just so I'm kind of repeating them for myself to follow up with that list. But Luke, what about on your end corporately? So that's what I said here: grade, width, setting, depth, geometry, continuity, metallurgy, structure, alteration, setting, host rock. All these things are geologically related. What about on your end? What is kind of the checklist? It's I suppose it starts with the shear structure, people. What else?
Well, I think at some point these things become a little bit less important. I mean, once you have a discovery and you really, at some point, I think it still is important. But especially as a small junior, I always, want to have a clean structure that every little bit of success, you can raise a bit of money at a higher level. Because if you cannot do that, and you always raise money at 5 cents, you often stay at 5 cents, and you have to do a rollback. Once you have, founders made the discovery, or at least started drilling good holes and did proper financings higher and higher. I think the first one was 20 cents, as we discussed. It was pretty open. I think 80 people participated, and I could have participated. So not you don't have to be Eric Sprott or something to take part in these deals. And then the next level was 40 cents, I believe, with a strategic investor. I'm not sure if it was B2Gold already or not. I don't think so. And then B2Gold came in. Maybe there was one in between, but they've raised every time at higher levels, and of course bigger rounds, which allows them to do more exploration and take a bit more risk maybe on new targets. So all those things look well, and at that point where you see that they are doing the right things in terms of financing, I'm not too worried anymore about shares because they don't have to issue that many shares to get a reasonable amount of money, especially at $300 million market cap. So what I'm worried about right now, or worried, I don't own it, is maybe their ownership. They don't own the full project. They own 75%. They have been making, I think, a change to the option agreement, but I don't think, and maybe I'm wrong, but I don't think they have changed that at this point to a new deal where they outright buy the 100% and change the deal. And I think if you are a company like Founders, that's a thing that you're trying to do. I think you want to have the full project, but it probably comes with paying the vendors a couple of $1 million because there needs to be an incentive for them to sell it and perhaps have a royalty or something, but then own the project, so have control completely. And then the other thing is Suriname. I guess Suriname is a mining country, but I would guess it's a bit higher risk than Guyana. There's a lot of artisanal miners. They are not always doing the right thing, so not everybody likes mining. I've been looking at some old documentaries with Cambior and companies that were active in this region already 20 years ago, and a lot of politicians, some of them supporting the mining but perhaps getting money, some of them going against mining. I think it's a country right now that's investable, but if I was a big investor, I would at this point really start thinking about what are the risks in terms of jurisdiction, what are the risks in terms of owning the project, and trading at $300 million or more, owning 75%. I guess they can solve all those things. There's always risk, so it's not trying to talk this company down. They're doing an amazing job, I think. But those type of risks I would start thinking about more so than share structure or warrants.
Well, and so you seem to have thought about them already. The geological upside that there is, that Tom talked about, and saying, this is open in all directions. There's still question marks that they're trying to solve now, but there seems to be geological upside. Luke, do you think that geological upside is going to translate to appreciation in the stock price? Because again, and you've mentioned it multiple times here, both of you, that it is 350 million market cap, so kind of on the higher end. So yeah, is geological upside going to translate into share price upside?
Yeah, that's an interesting one because.
Go ahead.
Sorry, Luke.
No, go ahead.
It's going to be diminishing returns, right? So every 100 gram meter hit is kind of priced in. So really, what could send this from I like to look at opportunities from a simple binary perspective. 0, no mine, 1 mine, right? So what's going to push this towards 1? We're probably at 0.5, giving them a score of 0.5 right now, which is a typical fence-sitting geologist answer. But from what I've seen so far, it's probably not going to be a mine yet. So what's it going to take to push it towards 1 on the binary scale?
Well, yeah, I mean, what is it? What do you think has to happen here to push it toward 1 for it then to translate into share price appreciation? I
think you need to attract institutional investment and a continuing investment from B2 Gold. You need to have a minimum of 2 million ounces. So that's 200,000 ounces for 10 years.
Okay.
So they need to demonstrate that sort of potential in a camp. It's probably not all going to come from Royo.
2 million ounces. That's kind of, am I getting an inside scoop on how it is for Deutsche Rohstoff? I mean, for you guys to get interested, it's the potential or the line of sight to 2 million ounces.
That's right. No, that's certainly not insider information. Most people in my position would be seeing that as a minimum. It's I really like all the rulisms. Small mine, small money, right? So if you go mining on 500,000 ounces, you've got all of the risk, all the mining risk for a small prize. Why not take that? It's the same. It's essentially the same amount of risk for a project with 2 million ounces contained. So, but my time and money is better invested in something that has more ounces for a similar risk.
I think my wife might cut out this part because you're essentially telling me that size matters, and she's always told me the opposite. Luke, what about you? Is there upside if this works geologically? Is there upside in the share price at this price?
Well, there's always upside and downside for sure, but that's the easy answer. I think I look at this in a very simplistic way as well as, would suggest that Tom is doing that as well, but I look at it a very simple way in terms of Philo is a very different company, but that's the only junior that has been taken over for $4.5 billion. And I assume that will never happen again, and that will probably happen again, but maybe 10 years, 20 years from now in a copper deal. So if we look at gold deals, you have Great Bear at 1.9 billion. Best case outcome so far in the last 20 years, I think. And then you have Reunion, 900 million. Rupert, 900 million so far. Vizsla Silver, 740, and Snowline, 800, 900. A couple of these big or high grade discoveries that really are liked by the market. So if you just take, I'm not comparing deposit models. I'm just comparing very valuable deposits that are of interest to majors or mid-tiers. And if Great Bear, or let's just not take Great Bear, but just look at Reunion with 900 million, Rupert 900 million, Vizsla, different type of system, but 750, and Snowline 850. Yeah, then everything has to work in your favor to make a three bagger here without dilution. And we didn't include the options and all the other things that may be still there. So for me, it's right now not of interest because you need so much good news to get your three bagger, and I think there are other places to get your three bagger. On the other hand, I think the really good discoveries, and this may be one, and Snowline was one, Rupert is one, Rupert is one, Great Bear was one. Those always also have dips in the share price, but they have, if you look back at the end of the story, it's almost one straight line from the left bottom corner to the right upper corner. Of course, with in between 30 to 40% drops. Do I want to take the risk here? I don't think the downside is that great because good people backing the company. On the other hand, you can only protect your downside so much. If the project is not going to deliver, then 330 million is a lot. Amex recently went from 300 million to 100 million when their resource estimate really disappointed. They traded at 300 million for many years, and only after the research estimate, the blue sky was gone for some reason, and the thing just dropped. And Amex was a little bit similar to me, where they had a really interesting, good discovery, but doubtful. Is it worth 300 or 400 million at this point? How much upside is left? And then they surprised the market by having a lower resource count than people expected, and the thing dropped by 60% or something. So yeah, long answer, but the story really is I wouldn't touch it. It doesn't mean they could make another discovery and still become a $1 billion company. I'm not saying that will not happen, but from a risk reward point of view, I would probably not buy it at this level. Because a lot of things need to go right to get your three bagger.
Okay, so I asked Tom, is it good from a geological perspective? He says it depends. Then I ask you, is it good from a share price perspective? And then you say it depends. Thanks for the answers, gents. No, that's a good answer, actually. And it does help me put my head around it. That's kind of how I think about it as well. But you're opening kind of the door here for a different part of the conversation. And I don't know who's best suited to answer this, but how does this story end? Does it get taken over? Do they build it? Who takes it over if it gets taken over? That's the answer. And then, of course, when? And maybe we can do it that way, Tom, on your end, geologically. You're saying 2 million ounces, but at what stage of the journey, if you want to talk about the Lassonde curve or whatever, at what stage of the journey does this get taken over?
Yeah, you're going to be unsatisfied with the answer again, right? So it depends on where you are in the cycle. It depends on how aggressive the mid-tiers and the majors are. It depends on results going forward. If they, can get potential, through sight to the 2 million ounces. And for some, look at G mining. I've got a model here of Oko West that I can spin. That's really a freakish ore body. Super continuous, super high grade. So if I was seeing things like Oko West being produced at Antino, I would say within the next 6 months. But I'm not seeing that yet. I'm surprised at Snowline. It's probably because of where it is in the world. I'm surprised that Snowline still exists.
You would have thought it would. I mean, it would have been taken over at this point. But then the question is also who takes it over? Like with FDR, with founders, who takes it, or who does this fit with? I mean, is it B2 because they bought that stake? Also, B2 is one of the few companies left that actually build mines. Barrick, Newmont seem to prefer buying mines, at least at this stage. B2 likes building mines. Well, I don't know if they like it, but they do it. And but there's a couple of others. So who does founders end up with?
Yeah, if I may, I think this is still a while. This will still take a while. B2 Gold is investing because they want to have, they now have a first seat or a front seat to see what happens and give them advice and look at the project, how it develops. They are building a project right now, so they're not going to buy another one, especially a risky one that hasn't delivered enough yet for them, I guess. They're still building goose in Nunavut. Looking at other companies, the big companies, it would surprise me that somebody else would take them over right now. Because all of these companies that are let's say 5 billion or maybe 10 billion are busy with other things in my mind. So if there's a M&A deal in the short term, I would rather think of a merger of two companies. I don't think it will happen, but then you could think of a Lundin type company, Lundin Gold, merging with this company, but I don't think a deal is close. And maybe tomorrow I'm proven wrong, but I doubt that. I think it's really a developing story, exploring. I mean, Discovery is just, if you consider Discovery, just a year ago, 1.5 years ago. So I think it will take a while before this really gets an end, but that's fine. I think companies, sometimes it takes 3, 4, 5 years in the good cases to be sold, and some projects almost never get sold, like Guyana Goldfields. They made a discovery in 2005 and had to build it themselves, and only 12 or 13 years later were taken over. So I'm not expecting a deal here anytime soon.
Still plenty of things to go through, by the way. I do want to talk about some of the similarities there as well. But if I had bought this, should I be waiting until the culmination of the story? Should I be selling my half of my position, or take my money off the table, take a free ride, is what Rickroll would most of the times tell me. When would be a good time for me to exit out of a trade in this case?
Yeah, Luke, you want to do one?
Yeah, well, if to be completely honest, and I mean, it's always nice to take credit when you're right. If I would have said yes to that, which I didn't, at the 20-cent deal, I probably would have sold this stock at 40 cents once the paper became free trading, because I always thought about it as a high grade but irregular story. And now that time is developed, or the project is developing and time is passing, it appears I was completely wrong on it, and I don't think I could have understood it completely, because I don't have the capabilities of modeling this data and make a geological model out of it and make a conclusion like, hey, this is investable. So even if I would have done the 20-cent round, I would probably have sold it already. If I would still own it at this point, I would sell it. And it's never fun to say that, because I'm not trying to work against this company. And again, they're doing really good work. It's just from a risk reward basis. I think 330 million, compare other companies at that market cap, and I think there's more risk here than in most with that market cap. So I would probably not be invested at this point, even though I would rather, I don't like to work against companies or be the skeptic, but I just think that's a pretty good valuation, and I would probably not buy it right now and probably sell it if I own it.
I think the boys on COCA are going to have a lot of fun with your take there. But Tom, what about you from the geological perspective? That's something I've always been wondering about geologists, is that do you know when to let go if the valuation has kind of gotten away from you? Because if you look at these rocks and you're like, oh, but there's so much more potential, for example, I want to see this thing play out, but maybe it's already at full valuation. So geologically, how do you deal with that? How do you know when to let go?
Yeah, it's extremely difficult. I think we spoke about this the last time I was on your show. Geologists are bulls. We fall in love with projects. We always see the upside, and we always sell too late. So I think I can, I really appreciate Luke's answer. I'd like to say if I had have, participated in one of the early rounds, that I would have sold already, but maybe I wouldn't have. It's this sort of recency bias. You spend time building leapfrog models, talking to management, maybe doing a site visit, and then you end up staying in for too long. So that's something that I'm, when I look at, my PA or the portfolio positions, I've got to constantly question my biases.
I think
just one more thing. I was thinking about it a little bit more. I'm not going to take my words back, but But anything
you're afraid of the CEO, CA guys. I can see it. I
yeah.
can smell it.
No, I mean, anything you've seen in these big developing discoveries, you see here. I mean, you see big companies coming in and new discoveries happening. And I mean, if they make another, it wouldn't surprise me that they make new discoveries. I'm pretty convinced they will make discoveries, and maybe those will be even better.
Yep.
And I'm not suggesting it cannot become $1 billion company. It's just for me, I would have sold this already, which would have been a mistake. But I can pretty honestly say that. And it depends a little bit what type of discovery it is. If it is something like Snowline or something like Rupert, where you see this consistency and you think, okay, I'm happy to take the country risk. I'm happy to take the, perhaps maybe studies risk. You're happy to take all these risks. A company like Snowline is almost like one of a kind. And I don't feel like that in this company yet. Even though it's a good discovery, it's better than 99% of the companies, I think, out there. But at this market cap, I would just think like, okay, I have a 10 bagger, I have my 20 bagger, or perhaps I have a double if I bought it at $2. I would probably sell it from a risk point of view versus the upside. Not suggesting that there is no upside, but there's also risk. There's always risk. And I feel like, yeah, the company is pretty well valued for what they have right now. But maybe tomorrow they have an amazing news release and everything changes. That could happen. And I'm not completely excluding that I will never buy this. If they find something completely new and different, maybe I'm going to buy this. But right now, as it is right now, this November 29th, 2024, I would sell it for what they have and what they are valued at.
Yep. And I mean, the unfortunate fact is, through that whole period where this thing's run up from 20 cents to $4, I've probably held Snowline stock that in that same period had, $100,000 or, a small investment in founders would have delivered superior returns. So, but I can't disagree with Luke either.
I think Snowline is also an interesting example that we could repeat this exercise on, and if people like it and they have suggestions for other stories that we should do this on, I'd love to, mostly because I don't really have to do much. You guys are doing all the heavy lifting. But if I think this whole story, like if I had to kind of summarize it all for me, because I'm an accountant by education, so I want things to be easy, and I do like spreadsheets that kind of spit out the right answer. But the founder story is a reminder that success is as much about timing and teamwork and strategy as it is about geology. So there's no either or. It's all of these things. And so it's share structure. It's who's involved. It's the execution, like Tom, like you mentioned, that having their own 3 drills, I believe now, and labs on site, and right time at the right place, right setting, and then the rocks, so like what we talked about, everything grade, width, depth, geometry, continuity, metallurgy, and so on and so forth. Because but at the same time, even the best rocks can fail you if you don't have, again, the right team to execute, or the market isn't paying too much attention, because the market seems to be liking this, right? So it seems like Founders has done all of these things right so far, and that's what makes their story not just a geological win, but kind of a good story to reverse engineer from a business perspective. And I'm going to ask you both the same question here. Tom, you can go first. What's the next founder? Who's the next FDR?
Yeah, let me stick in Central and Southern America. Greenheart. So Greenheart Gold, I believe they're called, is a remarkable, almost completely greenfields explorer that has something in the order of 45 million cash, which is an extremely unusual 2 sentences, as Luke will probably tell you. So how did they get to where they are? So they're operating in Guyana and Suriname, same part of the world. It's another Dave Fennell story. It's essentially the exploration ground from Reunion Gold after the G Mining took them over, plus let's call it 6 or 8 weeks ago, $30 million raise. So they got $15 million from the spin out and $30 million in in a raise. So they're extremely cashed up. They've got 4, potentially 5 projects. All of them have, indications of mineralization, same style of mineralization. And it's an extremely hefty market cap, a lot of cash, but you can't really knock the story. You have to back Dave Fennell and Justin, who's moved from, he was the VPX at Reunion Gold. He's now CEO of Greenheart Gold. You just have to back these guys because they're so good at what they do. Again, really good operators in a good part of the world, cashed up. Dave Fennell's out there doing deals, getting ground, and I want to see them drilling super soon.
You're right. They have a little bit under $50 million in cash. Last financial statement, September 30th, said 14, and then just recently they closed that 36 million bot deal, private placement. Do you know? But it's a bot deal, and that's kind of a red light goes off in my head when I see a bot deal. I kind of have, like Dave Lotan would say, no, I'm not going to say that. That's not fitting for this conversation. But it's a red light going off when I see a bot deal. Do you know who's participating in this bot deal? What's happening? Is this because it goes close to, Luke, what you and I spoke about last week. It's close to the idea of the supply and demand dynamics of the equity, like these shares. Who's going to be holding them?
Yeah, bot deals very often signal the top, at least the temporary top. I looked at so many charts, and I at some point I pulled all the bot deals and looked at share price performance, and they typically give you a bit of weakness because there's a lot of people typically involved in such a deal. A company guarantees raising the money, so there's lots of people then buying that stock through that company, like any of the mining banks that are still active. So if you don't have concentrated shareholders, but you have 100 or 200 new ones that don't really know why they're investing, then the likelihood of them selling is way higher, of course. So bot deals are not but I understand why. I mean, at some point you trade at a pretty good market cap, you get the money offered at a pretty good cost of capital, no warrant included, and then you do a bot deal to secure your next 2 or 3 years, because you don't only have to think about the upside, you also have to think about the downside. What if we get a market crash? Can we survive for 2 or 3 years? And I think in good times like this, a company like Founders should use it. And if you get offered $20 million, $25 or $30 million, and I'm not sure what the size was of the bot deal here, but I think 20. I think you should take the money not for the next 6 months of share price, but for the future of the company. So it's probably not a bad deal. It's a bot deal. But yeah, that's my thinking process. I think it's easy to say I don't like it as an investor short term, but in the long run, you need to raise money when everybody wants your stock.
Are you cracking up at your own jokes?
Yeah, no, I will leave the jokes to you.
What about you? What's the next Founders in your book?
Well, to make sure that I'm going to win this contest, I wrote down a couple of companies so that I have a better chance. So I think investing in a number of companies, I think the profile, if you just look at a certain profile of company, and Greenheart is one of them, I just felt recently that they were very overpriced for what they have at 80 or 90 cents. I'm not sure where it's trading right now, but probably a bit lower.
Come back, yeah.
It's a pretty easy answer for me because nobody knows where the next discovery is going to come from, but I just wrote down a couple of companies. Land Minerals, I mean, they have lots of projects, taking lots of risk at different places, so that's why the risk is not that high. They're not just drilling one project, but many with really good ideas and project generation. Some of the projects they do themselves. Amazing company and likely going to make more discoveries. The timing, you never know. That's why, I like Sunpeak for their VMS potential in East Africa, Azimut for their gold potential and other potential in Quebec. HEREIN in Finland. I think in Finland there will be more discoveries. That could be by Rupert, it could be by HEREIN or the other companies, but it's also a question of time and money expenditure. But I don't think that the 1 or 2 or 3 discoveries that were made there are the only ones. So that's going to be a discovery. There's going to be a discovery there, I'm pretty sure, but you don't know why and when. And as an investor, that's an important question too. And then as a last one, I wrote down fireweed. And all these companies are well managed, are able to raise money, are able to talk to good investors, not just people like me, but also wealthy investors and people who really want to back a company for a long time. So the 5 or 6 companies I just mentioned really have not just geological knowledge, they have knowledge about raising money and good prospects, good projects. And I'm pretty sure that one of those companies will come with a spectacular discovery at some point. But of course, yeah, is it in the next 6 months, 12 months, 24 months? Who knows? So it's a low risk answer, but nobody can really predict a discovery. But sometimes if you follow a company very closely, you see that the results get better and better and better, and you can get really high confidence in a certain story. I had something like that with Azimuth in 2019 when they made the Elmer discovery. My confidence was also getting really high of them making the discovery, but I cannot think of one name right now where I have the same feeling. But all these companies have a number of prospects that I really like, and so that's why I named them.
I'm not hearing much about the other side of the Guyana Shield, so the West African Birimian Shield, if you will. But we did talk about it kind of as a comparison to the shield that Founders Metals is operating in. Anything you're seeing over there, Tom?
Yeah. Do you want to talk about Awale? I mean, we've covered probably Awale gets covered a lot on various podcasts. Look, I think they have many great targets. A lot of people are bullish on Charger. I'm not. I think it's very small. I'd rather see the money spent elsewhere. I think BBM has scale potential, maybe 600,000 ounces in that sort of range already discovered on BBM and still drilling. I really like Empire. Vukasin dunks on me for liking that. He thinks that's a sort of like a soft answer because it's kind of being discovered, but I think they need to go back and follow up some pretty good hits at Empire, Scepter, and then the 100% ground. So, yeah, I mean, it's the same rocks that we've been talking about today. Super prospective. I'd love to see that team operate the way Founders do. And another group in West Africa called Aurum, again, super at drilling meters, super at moving their projects forward and testing ground. So, yeah, I love the Birimian. Super hot at the moment.
What's the second one you said? Aurum?
Aurum, yeah.
What is that?
That's an ASX
Okay.
listed, also operating their own rigs, also super cheap cost per meter and spitting out a lot of meters per month. I should add, I don't think they've discovered anything yet, but they're testing many targets.
Right.
And they've had a really strong share price recently.
Right. What about you, Luke? Anything you said, well, you mentioned Africa, but you went all the way to East Africa, which is a completely different setting. I think it's a VMS deposit, a VMS target that you referenced to. What are you making of West Africa?
Yeah, by the way, Sunpeak is not just VMS. They also have Orogenic, but the focus has been on VMS for sure. I was just scrolling down the West African list, of course, of course. And Awali tops the list like 5-6 times, but every time with their Charger project. Most of the projects that come after Awali are pretty established companies like West African, Orezone, Turaco, I think is also an Aussie listed one in Ivory Coast. And I don't really remember new companies, sort of new meaning newly established or maybe newly branded companies that are active there with a breakthrough so far. There's one company called Sanu Gold, I think. I don't follow them too close, but I have the impression it's a company also doing really good groundwork. I think they are in Guinea, close to the what's the discovery name again of the Aussie company? The big discovery 2 years ago, I think. Yeah, I will think about it in a moment. Or predictive discovery. I think
PDI.
they're not. Yeah, they're not too far away from them. I think Sanu is doing good groundwork, is drilling right now. Got an investment from, I believe, not Endeavor, but another big company. So yeah, Sanu is the only name that pops up in my mind as sort of a new story, new management team, trying to do something like founders did.
Does many peaks pop up on your list there, Luke? I think they're drilling in the Cote d'Ivoire as well.
Okay. Yeah, okay. It's there's not many new names that I can sort of think of right now. There was one company in Ivory Coast a couple of years ago that was private at the time and now is public, is doing quite well as in terms of their share price performance and market cap. But again, the name escapes me. But they didn't make a really big discovery yet. But so there's a few companies doing good work, I think, but there's nothing that pops up in my mind right now in West Africa that is something you should really watch based on what I know. But maybe there's also I'm not against investing in West Africa. It's just not. Sometimes it just happens the way it happens, and you come across a company in East Africa and you like the team and you stick with them. For some reason, I have never really met a company that I became a long-term investor in, I think, in West Africa.
Interesting. Yeah. I think, well, I like kind of the sub $5 million market cap companies because obviously I hate money. So I better not talk about what I like. I think we've been through it all on founders. What am I forgetting though? Anything else you wanted to talk about here, Tom, today that I'm failing to bring up?
No, that's pretty long, and I guess it's good to keep it to the same rocks, right?
Yeah, that's fair. Luke, what about you? Anything else we're missing this week? We are not doing the movers, so we typically do the big movers of the week. This week, there's nothing too major in the movers. Anything else you want to add, Luke?
Well, there's many companies I would like to talk about, but perhaps we should do that in the next episode, not the next one, but in an episode very soon. Because indeed, there's a couple of companies I think we're all interested in. Perhaps going to make a discovery, perhaps not, but something early. And I guess we can talk about these companies before they start drilling or before they. I mean, one company is Rugby Resources. We talked about a little bit. I think we should do that in a separate episode because we could easily talk for an hour about it. And I don't think we should rush it. So I would end it by saying no, if we do a topic, then let's do it well because I have my lists and Tom has his models. So maybe next time I will take the models with me and and Tom does the list. But no, this is pretty good.
Well, I would like to do an episode with a bunch of models in the room with us. That would be great. And Rugby is an interesting case, by the way. I've heard about it, obviously, from Tom before. Luke, I am sure that you're going to have one main issue with it is potentially the share structure because they have, almost 315 million shares outstanding. But yeah, we should definitely do that. They've just recently done a financing, I believe, Tom.
Yeah, I think it's still open. Okay. So we did participate, and it's a pretty fascinating story. I obviously do have a model, and I want to get to Colombia and check the project out. But like Luke says, as they get closer to drilling, I think we could probably spend a lot of time on it. Different rocks, porphyries, very young rocks. This could be the old rock episode, and we do a young rock episode.
I think there's 5 people watching who understood that joke, but it was a good joke. I appreciate it. Thank you so much, gentlemen. This was a lot of fun.
Thank you.
Thank you.